Welcome to a world of possibilities where your money becomes a catalyst for growth and opportunity. In this captivating journey, we'll unveil 15 investment gems that can shape your financial future. From the thrill of stocks to the stability of real estate, from the intrigue of cryptocurrencies to the allure of dividends, each path offers a chance to thrive. Buckle up as we explore a landscape where informed decisions open doors to prosperity. Get ready to unlock the secrets of smart investing and embark on a remarkable adventure toward financial success. The video is going to be amazing, so make sure you will stick to the end. 1. Stock market investments. Investing in the stock market involves purchasing shares of publicly traded companies. These shares represent ownership in the company and can potentially appreciate in value over time. It's important to research companies thoroughly, considering their financial health, management team, industry trends, and competitive positioning. Diversification is key to managing risk. Consider investing across different sectors and industries. 2. Bonds. Bonds are debt securities issued by governments or corporations to raise capital. When you buy a bond, you're essentially lending money to the issuer in exchange for periodic interest payments and the return of the principal amount at maturity. Government bonds are generally considered lower risk, while corporate bonds carry higher risk but offer higher yields. 3. Real estate. Real estate investment involves purchasing properties with the intention of generating rental income and capital appreciation. Residential properties offer steady rental income, while commercial properties like office spaces or retail spaces can provide higher potential returns. Real estate requires careful research into location, market demand, property management, and potential risks. 4. Mutual funds. Mutual funds pool money from multiple investors to invest in a diversified portfolio of assets. Professional fund managers make investment decisions on behalf of investors aiming to achieve specific objectives. Mutual funds come in various types, such as equity funds, stocks, bond funds, and balanced funds, mix of stocks and bonds. 5. Index funds. Index funds are a type of mutual fund that seeks to replicate the performance of a specific market index, such as the S&P 500. Since index funds aim to mimic the market's overall performance, they often have lower fees compared to actively managed funds. 6. Dividend stocks. Dividend stocks are shares of companies that distribute a portion of their earnings as dividends to shareholders. These stocks can provide a reliable income stream, making them attractive for income-focused investors. Dividend payments can supplement capital gains and provide a level of stability to your investment portfolio. 7. Peer-to-peer lending. Peer-to-peer P2P. Lending platforms connect individual lenders with borrowers, typically individuals or small businesses. By lending money on these platforms, you earn interest on the loans you've funded. P2P lending offers the potential for higher returns compared to traditional savings accounts or CDs, but it comes with the risk of borrower default. 8. Cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography for security. Bitcoin and Ethereum are among the most well-known cryptocurrencies. While they offer potential for high returns, their prices can be extremely volatile, making them suitable for risk-tolerant investors with a deep understanding of the technology and market dynamics. 9. Precious metals. Investing in precious metals like gold, silver, and platinum can serve as a hedge against economic uncertainty and inflation. Precious metals have intrinsic value and are often considered a safe haven asset. They can be purchased in physical form or through exchange-traded funds, ETFs, that track the metal's price. 10. High-yield savings accounts. High-yield savings accounts offer interest rates that are higher than traditional savings accounts. While they provide a safe place to park your money, the returns may still be lower than other investment options. These accounts are ideal for short-term savings goals and emergency funds. 11. Certificate of Deposit, CD. CDs are time deposits offered by banks and credit unions. When you purchase a CD, you agree to leave your money untouched for a specific period, term, in exchange for a fixed interest rate. CDs are low-risk investments, suitable for capital preservation and conservative investors. 12. Robo-advisors. Robo-advisors are automated platforms that create and manage investment portfolios based on your risk tolerance and financial goals. They use algorithms to select and rebalance a mix of assets, making investing more accessible and cost-effective for those who prefer a hands-off approach. 13. Healthcare and biotech stocks. Investing in healthcare and biotech stocks can capitalize on advancements in medical technology and treatments. These industries can experience substantial growth due to aging populations, increased healthcare spending, and breakthrough discoveries. However, they also carry regulatory and clinical trial risks. 14. Renewable energy investments. Investing in renewable energy companies aligns with the global shift towards sustainable energy sources. This sector includes solar, wind, hydroelectric, and electric vehicle technologies. Government incentives and increasing demand for clean energy can contribute to potential returns. 15. Startups and venture capital. Investing in startups offers the potential for high returns but comes with significant risk due to the uncertain nature of early-stage companies. Venture capital firms and crowdfunding platforms enable you to invest in innovative ideas and technologies with the hope that these startups will grow rapidly and become successful. It's important to tailor your investment choices to your individual financial situation, risk tolerance, and goals. Diversifying your investments across various asset classes can help you manage risk and potentially enhance your returns over the long term. Consulting with a financial advisor or doing thorough research before making investment decisions is strongly recommended. If you're excited to see more amazing content like this video, make sure you hit that subscribe button and turn on notifications so you never miss an upload on my channel.